Right, Mr. Raval. I think that's what India has been trying to do over the past 1 year, make itself resilient, sign those free trade agreements with various countries, including the EU, the UK, Oman. We are seeing so many free trade agreements so that we don't have to, rely on a single partner. But US remains to be our largest partner, trading partner. Let's look at some more inputs that are coming in. CII President Rajiv Memani has welcomed the expected reduction of US-India tariffs to 18%, calling it a major step forward in the strategic economic partnership between the two countries. He said that the Confederation of Indian Industry congratulates Prime Minister Narendra Modi and Commerce Minister Piyush Goyal for leading constructive talks and securing the deal with India's most important trade partner. Memani said that the move will improve the global competitiveness of Indian products and support manufacturing growth, job creation and stronger supply chains. All right. Let me in fact go across to Yatish Rajawat, who's joining us on the broadcast. Thank you so much, sir, for joining us on the broadcast. We appreciate your time. Sir, when we are looking at this entire tariff reduction, how are you in fact observing this entire situation that is currently unfolding? The details that we have is 18% reduction of the tariffs, and we have a certain questions that loom large, sir.
So basically, this is an interim deal in that sense. The tariffs these were tariffs which were levied on us as almost penalties of sorts, and they're reducing them from 50% to 18% is step one. The details of the deal are not fully public yet, but I think the negotiations will continue and to bring it down to zero, hopefully. We also don't know that how this will affect some of the major industries like automobiles, steel, which were heavily tariffed by the US government. I know that the stock market is cheering it, and rightfully so, because it is a good beginning of sorts, and the fact that it happened so fast also shows the fact that Indian government held its own in terms of the so-called bullying techniques adopted by US government in levying these unilateral tariffs on India. What we have given back in return, there are only, there's no concrete proof or source about whether we will continue to buy Russian oil or not. I don't think so that would be a make or break for the deal, because we've already reduced our dependence on Russian oil quite a bit. Whether we will now, as Trump hinted in one of his tweets, that we will buy Venezuelan oil is again up in the air. But I look at it not as a conclusive deal. I look at it as an interim step in a final deal, and I'm still waiting for the details to be public.
Absolutely. In fact, let me also introduce some other guests who have joined us right now. CA Manish Gupta, finance and market expert, and we obviously have Professor Arvind Tejawat on this. So let me first, we in fact also have Karori Singh, foreign affairs expert, joining us on the broadcast. So if I can go across to Mr. Singh first on this, sir, how are you looking at this entire development geopolitically? Because Russia says, we have a statement from the Kremlin saying that India has not informed us of any sort of halt in Russian oil purchases, and India remains mum about it. We are yet to see the details of that deal, but this seems to be finally a thaw in the US-India relations, which had been quite strange. We, we had seen Trump administration officials stating that we'll put 500% tariffs on India and its goods. But now finally there seems to be a thaw. We are seeing, only 18% tariffs. So how are you looking at this entire scenario?
You see, Shivani, I would like to carry forward the Yatish's argument. In fact, we have got into a vicious habit of coming on a hasty conclusion. Yesterday, when President Trump's post on X came and our Prime Minister responded, immediately commentators and economists have started concluding that rupee will be strengthened, the corporate entities will be the gainer, and then GDP will be increased, and so many they started calculating without knowing the details about the deal, what type of deal is there. Since the Trump put tariff and the penalty that 50%, India already started diversifying its trade towards other countries and intensified bilateral agreements with group of countries and individual countries. So India already diversified. So Indian economy did not have much negative effect. But now, since Trump has announced the 18% tariff, what type of tariff India will impose on American goods, that is not clear yet. And so so many things shall have to be clear. Thereafter, we can say something. Of course, the stock market is very sensitive. It immediately reacts and responds to any type of financial and economic change. So share market is increasing. Of course, that is the good thing. But beyond that is countries, huge country like India, the physical economy is more important. The people at large are more important. How this deal will affect the physical economy of India. And second thing is people's well-being in India. Definitely MSME will get some boost. When the tariff will be low, Indian exports to US will increase. But beyond that, things are not clear. So we should assess each and everything in a practical manner, systematic manner, once the deal is on the public domain, without which we are giving assessment, that is something speculative. So we should not get involved in all these things before the deal comes in the public domain. It's just one announcement from the US president. From our side, there is no announcement what type of deal we have entered in. So, Shivani, unless or until things become clear, we should not give any calculated assessment. We can give certain type of hints and some speculation we can give. But it's a definitely one thing is important. The strategic positioning will certainly get boost, but at the same time, India had very good relations with Russia. If India was highly dependent on for its defense requirements on Russia, so how Russia will react and respond. So whether we will completely stop importing Russian oil or not, that is also not clear. So unless or until things become clear, Shivani, we should not be so speculative, at least on the national media. Right, over, Shivani.
Right, sir. In fact, the rupee has strengthened by 119 points since today morning. We are seeing the markets obviously cheering the announcement because they rally with these short-term announcements. But let me introduce this piece of information that is in fact coming in, that the Ministry of Finance has now issued a formal statement on the India-US trade deal. The Ministry of Finance has stated that the India-US trade deal will further expand and deepen the trade between two of the largest economies of the world. It will create more opportunities for our labor-intensive and manufacturing sectors in the US market and give impetus to mutually beneficial collaboration in high and advanced technology sectors. Let me in fact rope in Mr. Rajiv Gupta on this. Sir, we have the Finance Ministry giving out a formal statement. The ministry is stating that this will be a boost to a manufacturing sector in the US market. It will give a boost to our labor intensive sectors as well, and also India will be looking at a lot of collaboration in high and advanced technological sectors, sir.
Well, Shivani, I think first of all, I would like to say that whatever my colleague just said is true. We should not be speculating certain things. It's absolutely correct. However, given the circumstances in which this trade deal has happened, my sense is, as I said, I'm reiterating it, my sense is that India would not have given away too much, because I think, to my mind, the way the whole geopolitical situation was emerging, it was US who was under more pressure to do this deal. We had in the past few months done deals with other countries to diversify our exports. So I am sure that we would not have given away too much to get this 18% tariff from 50%, because probably if that was the case, we would not have done this deal. That is what my sense is, though it is just a sense. I mean, it is not something which is steeped in specifics. But in the just assuming that India would not have given away too much, let us understand what India actually imports from US. I mean, India imports, for example, there are only two countries where you buy aircrafts from. So it is Boeing and Airbus. So both of them get quite a number of orders from all the countries. India is expanding. India's air traffic is expanding, and we would definitely be buying those Airbuses, etc. Boeing from US, and I'm just those kind of things, or some high-end, army, armaments, etc. We were already buying. We may still keep on buying those things. There could be certain giveaways that India must have given, because for a trade deal to be signed, you must be signing on something where you give something and you get something. But in the process, I don't think again that India has given away too much. The markets are rejoicing. I also don't give it too much credence, because markets rejoice at small things. However, having said that, because if you really look at it, everything falls in place. I mean, we had the budget that had come out had a lot of incentives for the MSMEs. Those MSMEs would get a boost if there is further market which gets opened. Even if we had diversified and we had got other markets opened up, the overall volume of exports could increase, which I think it will increase in this whole scenario. As far as imports from America is concerned, I am very sure that we would have given away things where our own industry is fairly mature, and where giving away a few things does not really give a big impact to our own industry. That is how I look at things. So I think in this whole scenario, if you really look at it, to my mind, whatever Trump has done for last 6 months probably has been a big gift to India, because in the process we hastened a lot of our own trade deals. The world has also understood that you cannot be relying on one country totally. The geopolitical situation has changed in the process, and I think India has emerged stronger in this whole 6 months of various kinds of things that have happened. So to me, this is a very welcome step. However, as my colleague said, we still are waiting for the details to come out. Anything which we say is based on assumption. But the way and the timing, to me, my assumption is that India would not have given up too much. Had it to give too much, then it would have done it before the EU-India trade deal. It would not have waited till then now.
Absolutely. In fact, let me also introduce this piece of information that is coming in. The SPICE chairman and managing director Rajesh Singh has hailed the finalization of the India-US trade deal as a watershed moment for the country and a major boost for the Made in India brand. He congratulated the government of India on what he called a historic achievement. Singh credited Prime Minister Narendra Modi's leadership, saying that the agreement reflects decisive handling of complex global challenges while keeping the interests of India's 1.4 billion citizens at the center. Let me rope in K. Yatish Rajawat on this. Sir, you are the CEO for Center for Innovation in Public Policy. How are we looking at this deal actually strengthening certain areas? We had the Finance Ministry statement saying that there will be mutually beneficial collaboration in high and advanced technological sectors. We are also seeing how various industry leaders in fact are reacting to this deal, saying that it will create more opportunities, it will create promote made in India over there in one of the biggest markets in the world.
So I will again caution us on the side of conservatism here. This is a reaction from the US side. It has been driven by the US side, and this first sign of it is that they have reduced their tariffs first from 50% to 18%. We have not yet fully announced all the items or all the sectors that we will reduce the tariffs, or we will or where we want an edge. Deal is also partly driven by the fact that we signed the EU deal, and it basically pushed US into a corner, because if we have the deal with the next biggest so-called geographical area that we export and import from, and where we have a surplus in our favor, and we signed that, and we've shifted both the goalposts of our future deal making and also our FTAs. So these are signs which must have been read properly by the US administration, and they realized the fact that maybe the pressure that they had levied on India by unnecessarily burdening us with these tariffs is not working in the direction of getting a deal signed, and hence they have taken the initiative from their side to reduce it. Now, what does it impact? Okay. Now, let me give you one sectoral insight. Some of the oil and energy stocks were shooting up in the stock market today. Now, the interesting thing is that they're shooting up because in the hope that they'll be able to export oil back to US, and we do. There are 2 or 3 companies, privately held companies, which do that. But remember this also, that for energy imports, there was no tariff. So these companies are neither affected positively nor affected negatively. But their stock has gone up. Similarly, we have seen the stocks of all automobile companies go up today. Now, if you were to look at it in the context of yesterday, when the market actually saw the largest crash in the last 6 years, then this is actually a recovery. So the market was really looking for an excuse to bounce back, and bounce back it did. So it is not totally a reflection of what happened with the US-India trade deal. It is more a reflection of what was the overreaction yesterday, and therefore there was there was short covering by both the derivative traders and even FPI. Now, but again, on the other side, there is an overhang, okay, which was on both the stock markets and Indian exporters, that was there for the last year or so, which had reduced foreign investment into the stock market. As you know, that Indian stock market in 2025 was an underperformer compared to the top 5 stock markets in the world. We also did not receive any foreign portfolio investment of any sizable nature in the whole of 2025, and in right up to the time that we are doing. We have only been seeing these investors exiting the Indian market. So this overhang was largely due to the fact that there was this tariff hanging in the air, and investors, companies did not know what to do about it, whether they should, and this also had an impact on private investment. As you know, private investment in India has not taken off for the last almost 18 months now, in spite of the fact that production capacity is reaching its upper limit. And so this cloud of overhang has dissipated to a certain extent. Now, this dissipation does not mean that immediately things will change. Things will only change once the clarity is there sectorally, and secondly, the bottom line or the top line of these companies will only improve, or they will only start making investment, or they will only start increasing their production if they see a continuity in this tariff approach. Because they will also have to plan for not for the next day, but they will also have to plan their production at least for the next 6 months, 1 year. So they will also plan their exports or their increase in production if this tariff remains at 18%, or is it going to drop below 18%? And that will determine pricing, and that will determine consumption in US or their landed prices in US. So all these things are not reflected in the reaction of the stock market. The stock market, as we all know, is a typically does a knee-jerk reaction, as it did, on the budget day, and the subsequent day on the STT, which does not really affect the country or any companies, but the market came down, and today again it has risen by almost, the Sensex has gone up by 2.83%. The Nifty is up. Almost all stocks in sectors are seeing a boost. So there is no explanation for the whimsical reactions of a daily basis of a stock market. But yes, there is a fundamental shift which has happened. The shift is interim in nature. The long-term fundamental impact of that shift is yet to be seen, both on companies and on sectors, and it will hopefully emerge. And if you see you just read out the Ministry of Finance statement, it is a generic statement. It is welcoming it, but it is not giving any other details as to how have we dealt with the agriculture point, what have we done on the dairy side, and these were important sectors which were concerned at one point in time. What are we doing on the services import? Has the US government given us any reprieve on the H-1B visas, for instance? That was one of the biggest point for all IT services company in the country, because they export manpower, and so all these things will now roll out over the next, I think, 2 to 3 weeks, as we start getting more and more in details about each sector.
Absolutely, absolutely, sir. In fact, there is this piece of information I'd like to introduce for our viewers. Moody's Ratings has said that India is unlikely to immediately stop all